Hey everyone, it's Evan here from the Trade Risk, and in this video we're going to discuss a recent trade members and I took in XLU, and my goal is to give you some insight into our trading process and hopefully teach you something along the way. If you have questions or comments about this trade, just please leave them below in the comments section and I'll get back to you and answer them as soon as I can. So XLU was a trade that we got involved in on January 29th, and it was a trade that lasted quite a while for us. It was about a 2-month trade, and we exited the final position, final piece of the trade on April 5th. It was a winning trade. We made just under 2 times our initial risk, and we're going to get into all these details throughout this video. So this was the technical picture when we entered. The pink arrow there shows our entry point, and this is what we were looking at. So we had a long-term uptrend in XLU. Note that this is a monthly chart that you're looking at here. So each candlestick there represents 1 month of trading. So you're looking at a few years, not just a couple of weeks if you're used to just daily charts. So this is a long-term trade. We're going to get into sort of this concept of trading on a monthly chart in just a little bit. So to go back to the technical picture here, long-term uptrend, and we had about a year of consolidation. Notice starting at beginning of 2015 January, we started to pull back and consolidate sideways. We had this pattern developing of lower highs and higher lows. So that developed that triangle, that tightening, that coil pattern that you see there. And we also had some pretty strong resistance going right across the screen, that dashed line right at $45. So on January, this was the close of the month. This is January 29th, with this screen, January 30th. When we took the screenshot, and that was the closing day of the month, and that represents a breakout to us of both that trend line that's coming from the lower highs and also that horizontal line around at that $45 mark. We pierced through both, a nice expansion bar, breakout of both of those. That's our signal to entry. So it's effectively a pullback breakout trade in the context of a long-term uptrend. So why XLU? We know that the technical picture was there. We just went through the technical pattern of what we like to see. But now let's look at some other things. First is always the market outlook. And our market outlook at the time was cautious. Remember, this is January 2016. This is where everything was getting sold off. We came in to start the new year and we immediately just started breaking support and heading lower. We were cautious on the market. However, the market did just experience about a week or so bounce off of the lows from January. So we were trying to stabilize a little bit. There was that strong bounce, so we knew maybe the worst of it was over, but we knew we still had to be careful. The real kicker of why we like this trade was because of the clear outperformance. Remember, XLU represents the utility sector in the S&P 500. These represent the strong dividend payers, the defensive names. So this is effectively your flight to safety trade. While risk assets were getting sold off, people were panicking about growth, China, oil, all of these concerns. The natural sort of rotation is to the defensive sectors like XLU. So while the S&P at the time of putting on this trade was down 5% on the year, remember this is just in January, the XLU was already up 5% on the year. So that's a 10% differential. Very clear outperformance. That was a strong signal, in our opinion, of wanting to be involved in this sector. Also, now remember that this is a trade taken on the monthly time frame, and this may not be something that you do yourself, but let me spend a second here to sort of describe what it's like trading on the monthly time frame. I really don't treat it any different whatsoever than any other chart or time frame that I trade. The truth is, if you're trading sort of either price patterns or momentum in our case, those exist. That sort of behavioral concepts and price action exists on all time frames. So really, you just need to make sure you're accurately accounting for your risk and the amount of movement. Your stops are naturally going to be wider because you're dealing with larger ranges. You're dealing with monthly charts that can move 10 and 15 points versus daily charts that your stop may only be 2 points away. So as long as you account for your risk in the trade and you're aware that this trade's going to last for 2 to 3 months instead of 2 to 3 days, there's really no difference. Your position size is a little different. Your risk, your targets are bigger. Your stop losses are a little wider. That's about it. So I don't treat monthly time frames any different than I do the daily or even the weekly that we trade here. Only thing that changes is basically our risk parameters, and it's just to account for the larger targets, larger stop losses. And again, this is sort of an interesting trade because I know we're momentum traders, breakout traders, momentum traders, and it's funny, it's ironic that in this video, we're trading probably the slowest, most boring ETF, the XLU, which tracks utilities, and we're also trading it on the monthly time frame. This just seems so crazy for momentum traders that are usually, only trading the GoPros, Amazons, Apples, the fast-paced movers of the world on short time frames, and here we are doing this on XLU on a monthly time frame. But the fact is, it works. It's a very attractive setup, and in fact, this was a conviction trade for us. That means we allocated more capital to this trade instead of just doing our standard lot size, which is almost always what trades are for us. We actually allocated 1.5 times the amount of capital that we do towards this trade because we liked it so much, because there were so many things working in this trade's favor. We put more behind it. That's how much we liked it. Finally, we even collected a dividend along the way. That's, I guess, maybe the beauty of holding something for a few months. You might even get lucky and collect a dividend. So that also happened. We'll get into that in just a little bit. So here is the initial trade entry here with our stop loss and our target. So the black dashed horizontal line across your screen, that was our entry point. That price was $45.24. That's when we got long this. This is where we got long XLU. Our stop loss, that red dashed line, that came in at $43.30. So you can see a pretty tight stop loss, 2 points away, and basically near the lows. It was the opening levels of January for XLU, so not terribly far away, but enough room to basically say, okay, if we're back below that red dashed line, then this breakout's just not for real, it's not ready, and we'll need to give it some more time. So our R in this trade is 1.94, just under 2 points, and our target for the trade is 48.15. That's the green dashed line on the top end there, coming close to the 2015 highs, but you can see still below them, and that's where we're looking to take some profits. So let's step through this trade and see how this developed. So this is month 1. Remember, this is a monthly chart, so 20 days of trading has just passed as you look at this next bar. And you can see it. We saw a nice continuation right out of the gate. We did fail to hold those upper $47 level prices. You can see we retraced effectively 50% of this of February's progress. And again, while this may look concerning to some, while this may look like a sell signal to some, maybe it's time to scale out, maybe it's time to reduce. This looks pretty ugly here. We're not doing any of that. We're only going to raise our trailing stop, and that's what you see there in the table. We moved our trailing stop up to about $44. So we're starting to increase that stop level as price works in our favor, and we're not worried about taking profits or getting too, without over managing this trade and trying to sort of overthink things. So that was the progress on month 1. The only thing that changed was our trailing stop. Month 2 is when we finally got some action in here, and we took some profit at 48.60. 61. So you can see above our profit target. That was for a 3.37 point gain, and that came out to about 7.45%. So right at that pink arrow, that second pink arrow there, that's where we took profit. Notice now we had a very strong close. 49.62 was the close of the month. Also notice our target got moved up to 49.50. So let's talk about that. As soon as we take profit on a partial position, we're going to look for the next target point. And in this case, it was 49.50. That was the next level we wanted to take profit. Now notice we are above 49.50 and we haven't taken that second piece of profit off this trade because we are sort of discretionarily looking for a little bit more. This trade is working in our favor very nicely, and we want to try and get a little bit more out of this. So we're going past our initial profit targets and we're trying to get a little bit more out of it. So let's move to the next slide here. Also notice though, before we do, our trailing stop got to move up quite a bit after this month, up to $46.50. So a big raise in our trailing stop. And again, we're going to continue to move that up so long as price moves in our favor. Now, month 3, this is where we saw another piece of profit taken and also an exit of the entire trade. So let's get into that. First, let's discuss the exit points here. Reading that orange table, 49.84. We were really lucky in being able to get essentially the highs of this trend, or so far anyway, highs of April, off for another 35% of profit. That was about a 10% gain from our original entry. And then we exited the entire trade back down around 48.75. So those are the two arrows on the right hand side of your screen there, indicating those profit and exit points. So let's discuss a little bit further why we took that profit at 48.75 and then exited the trade a little bit shortly after. And we're going to look at the daily time frame. So now this is a daily time frame of the same monthly chart we were just looking at. The same two final profit targets are indicated there by those pink arrows. 48.75, you can see that was our exit point. That was cut and dry. Remember, our target was 49.50 for that second piece. So we were just trying to get a little bit more out of it. And we were using the daily time frame. We were looking at a few different indicators, things that we talk about day to day, with members. So we were lucky to get the highs of the day off. That doesn't usually happen, or certainly doesn't always happen. And that was pretty cut and dry. What made us exit the trade a little more interesting is once we had 70% of our trade off, because that's what it was, we had just 30% left after we took that second profit target. That's just a little bit of a runner. That's a small piece of the trade. And often what we'll do is we'll go down to a daily time frame and start managing risk and managing that trailing stop on the daily time frame. Now that we don't have much left, we just want to try and get as much out of that last piece as we can. We know that the trend has been extended now. A 10% rally from our entry price in something like XLU is generally not something that's super sustainable or something that's going to continue for another 10%. Although, again, we're not going to fight it because it is momentum. We're going to try and ride it out. But that big red candle there, that broke trend, is our exit point. When we convincingly saw something that changed the characteristics of this trade. Look at that exit point, that second candle there, and look at the difference in sort of the behavior of price on that day versus all these other days going back within this recent trend. So it was a clear break of trend line there. We had a small position left. The trade had run its course. We had gotten nice profits out of it. It was time to move on. We exited 48.75, took the rest of it off, 7.82% gain on that last piece. So let's put it all together. 49.08, that was the average exit price when you factor in all these different partial exits. That came into a 3.84 point gain, 8.5% on the trade itself, and just under 2 times our risk. So that about wraps up our trade review on XLU. If you have any questions or comments, just please leave please leave them below in the YouTube channel. If you like these videos, let me know. I'll publish more of them. But I hope this was informative. I hope you learned something there. Taking trades on the monthly time frame can be just as profitable, and they can sort of work in the background while you are more active in some of your other time frames. That's why we love them. I always like taking a nice monthly trade when we have something that looks as favorable as XLU did. And also remember, we did collect that 37-cent dividend on 318, 37 cents a share. So there's a little bit of extra income on this trade through that dividend. Finally, if you want to receive trade alerts in real time, if you want to participate in trades just like we covered in today's video, then there's a link appearing in the top right-hand corner of your screen that you can click on, or you can head to thetraderisk.com/premium. Just drop that in your browser or click the link in the top right-hand corner to get more info and sign up for our premium membership. This is where we send out all of our trades that we're taking in real time, as well as the thought process behind all of our decisions. So every single day, just like we stepped through in this video, you'll get updates from us describing why we're in a trade, what we're going to be doing next with it, and we'll also be analyzing the market. So if this is something that interests you, then check us out, thetraderisk.com/premium. See if we could be a good fit for you. Otherwise, thank you for watching, and I will catch you guys next time.